The Reserve Bank makes it clear that it isn't clear whether rates need to rise again. Fortescue Metals gets hit with a cyber attack, and super funds slammed for not doing enough to prepare for the surge in baby boomer retirements. Welcome to Fear and Greed Business News, Australia's best business podcast. It's Wednesday, the 19th of July, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you are talking about AI today. You're speaking with Frank Windolowski, the Executive Vice President, Insights and Data APAC at Capgemini. Quite the title.
It is quite the title, all about what consumers think about artificial intelligence and pretty much what businesses should do about that. Capgemini, of course, one of the world's biggest research firms, has done a lot of research into this. Very interesting chat with Frank about AI and where we're going.
Yeah, it's a good one. It's coming up a little bit later on. The main story this morning, though, Sean, the minutes of the Reserve Bank board meeting were released yesterday, and it's clear that whether or not there are more rate rises is very much data dependent.
Yeah, so if inflation data due for release in a week's time is higher than expected, well, a rate rise is likely. If the employment market data due for release tomorrow is stronger than forecast, then the likelihood of a rate rise will definitely increase. But if the releases don't meet expectations, it's quite possible there won't be a rate rise next month, maybe not one in September either. The minutes say that the board believes further rate rises might be needed to tame inflation, but the central bank wants to know more about price rises, the global economy, the labour market, and household spending. What happens in upcoming meetings will very much depend on economic data. It just seems, Michael, the momentum towards lifting interest rates is dissipating, thanks to signs that inflation and the economy are slowing. One of the reasons the bank didn't lift rates for the 13th time in 14 months when it met 2 weeks ago was fears about a sharp jump in unemployment. That's why tomorrow's numbers have suddenly become very, very interesting.
So does the Reserve Bank think that the rate hikes are doing enough to lower inflation and slow the economy?
It seems that way. Certainly there seems more confidence that it's happening at least. The board minutes mentions the considerable slowdown already underway. They say that at 4.1%, the cash rate is clearly restrictive, and members discussed the risk that output growth slows by more than expected after mortgage repayments reached a historical peak of 9.4% of household disposable income in May. Previously, the bank talked about a finely balanced decision to lift rates. Looks like the balance isn't quite so fine anymore. Among market economists, there's now little consensus about whether there'll be a rate hike in 2 weeks when the board meets again. The financial markets are pricing in a small chance of a rate hike. If you read the headlines this morning, some are saying there is going to be a rate hike, others saying there isn't going to be a rate hike. A lot of uncertainty, Michael.
Yeah, and speaking of little consensus, Sean, it appears there is no consensus on the pronunciation of data or data, because I insist that it is data, and you...
I say data, do I? Oh.
Yeah, and usually what happens is that when you and I differ on a pronunciation, whoever says it first, the other one will just kind of...
Just follows?
Yeah.
Yeah, right.
And this is one that I suspect you and I will never agree on.
I might go to data. I might follow you.
God, that was easy.
Well, I don't like data. I mean, data is a very Americanized version of the word. Data is probably closer to the truth, though.
It makes you sound very official when you say data.
Data, yeah.
Ooh,
yeah,
hello.
Maybe. Hello.
Oh, goodness me.
My heart's beating very fast for this time of a Wednesday morning.
Mine too. Let's get on to the local market, Sean. What happened yesterday?
The S&P ASX 200 closed down just a touch to 7,283 points. The real estate investment trusts and telcos led the way lower, while healthcare companies were among the best performers. Wasn't really much of a trend yesterday. I suppose less risky assets did a bit better, but all in all, it wasn't a massive trading day. Among the large caps, CSL performed strongly, up 2.2%. Haven't been able to say that very much in recent times. National Australia Bank was up 2%. ANZ wasn't far behind, but there were a bunch of companies that didn't do so well. Aristocrat Leisure was down 2.7%. Telstra was off nearly 2%. Transurban, Woodside and BHP, they all did fairly poorly. Among the best performers was construction and mining contractor NRW Holdings. It finished up more than 5%, the best of the top 200. Payments group Block and AGL Energy were also among the better performers. Lendlease's share price tumbled 5% after it said it plans to sack more than 10% of its global workforce. That's about 740 jobs. Investors are worried about what that means for earnings. And the share price of rail freight operator Horizon fell 5% after it downgraded its earnings forecast.
And what's happening in international markets?
Things are in a bit of a holding pattern at the moment as investors work out if and when the US might head into recession and whether there'll be many more interest rate rises in major economies, kind of what we're talking about locally. And our main story this morning, that's happening globally as well. Yesterday, oil prices were largely unchanged. Gold was a bit higher and the Aussie dollar is buying just over 68 US cents.
Sean, big day for you today. You've got a debate to moderate.
I'm moderating a debate at the Mumbrella 360 conference between in-house marketers, agency marketers, and independent marketers. And I don't really have any preconceived ideas about which of those three groups is going to turn up with the goods today, but I'm looking forward to it, I must say. And I get to just sort of shut people up, 2 minutes, that's it. You're off.
What you should do is get a bit of advice from our Fear and Greed colleague Adam Lang, who is the moderator and the adjudicator for our weekend edition every week.
Yes, that's true.
And he always goes into that with a very preconceived idea of who's going to win.
I think you won last week, didn't you?
I did, but that's because Adam wasn't judging. We had Jennifer Duke judging.
Yeah, good point. Good point.
Indeed. Well, good luck today. I hope it goes well. Mumbrella 360. It should be a fantastic battle, and I'm just excited to see how you go.
Right. I think the moderator's idea is just to stay in the background, isn't it? Let the talent do the talking.
No, Sean, get yourself front and center. I will be looking out for you.
Okay. Good. I'm looking forward to it.
We'll be back in a moment with the rest of the day's business news. Sean, Fortescue Metals has been the subject of a cyber attack by Russian hackers, adding to a pretty hectic week for the mining giant.
The C10P ransomware group, known as CLOP, is thought to be behind recent attacks on the Tasmanian government, Crown Towers and Rio Tinto. And yesterday it said it had sensitive customer data, but hadn't yet leaked any documents, so as to give Fortescue a chance to negotiate a ransom payment, according to a story in The Australian. Fortescue Metals described the attack as a low-impact incident that occurred on May 28, where a small portion of data was disclosed. It said it was not confidential data. CLOP came out and said, well, it's a financially motivated attack only. I suppose there's honour among thieves. It's only about the finance, not trying to hurt the company or something or other. Anyway, we'll see how this one plays out.
Baby boomers, beware, Sean. The super funds aren't ready for your retirement. That's the finding from a review of the sector released yesterday.
This is a really important issue because we have hundreds of thousands of people about to hit retirement. And it's okay to save for retirement. What happens once you get there? How do you manage your money? Superannuation funds are showing, and I quote, a lack of progress and insufficient urgency, end quote, in preparing for the impending retirement of baby boomers. That's according to a review by the Australian Securities Investments Commission and the Australian Prudential Regulation Authority. It's the first such review, and it follows new legislation introduced last year that effectively told the super funds that they had to worry more about what to do with people's money when they reached retirement, what they call the decumulation phase, rather than just when people are feeding money into the super funds, that accumulation stage. The review said that most super funds are falling short on the support they offer and have no concrete plans on how to improve their failings. In fact, most funds have done no in-depth analysis of their members' income needs in retirement. In response, Financial Services Minister Stephen Jones said standards need to improve. They sure do. If I'm putting my money into my super fund, when I get to 65 or 67, when I retire, I want my super fund to have given some thought about what to do with all that money, and they're not.
Considering the size of the sector, that is such a massive, massive issue.
Yeah, and 12 months ago, they introduced this thing called the Retirement Covenant. And the idea was that would force the super funds to think beyond just the accumulation phase. Super funds obviously like the fact when people are giving them money, they're less perhaps enthusiastic about the drawdown stage because people are taking money away from them. Anyway, it's something we need to keep an eye on. That one?
Yeah, good summary of the story actually, because it's something that's worth monitoring. Now, submissions to the Competition Watchdog's inquiry into deposit rates have been released, and the banks, perhaps not surprisingly, say it is a very competitive market.
Yes, there is more to this story, though. The banks have warned that the Australian Competition and Consumer Commission needs to look at all sources of bank funding, not just deposits, to get a full view of what's going on. Deposits provide really cheap money for banks, which they then lend to customers. In fact, deposits provide about 60% of the money used to make home or business loans. But there are plenty of other ways banks get money. That other 40% might be bond markets or interbank loans, among other things. And those ways are much more expensive. The banks are worried that unless all sources of funding are considered, the government could make some sort of decision about deposit rates that could significantly harm profitability. I know it's big business, I know it's big banks, but we all hold them in our super funds. If we have a big drop in profitability in those big banks, our super funds don't do so well. This inquiry was announced back in March after many complaints that banks weren't lifting deposit rates as fast as they were lifting mortgage rates. Jim Chalmers came up with the inquiry. It is a complex issue, though.
Yeah, sure is. Now, gloves and personal protection equipment manufacturer Ansell downgraded its earnings outlook yesterday, saying customers post-COVID have ordered much less and the group has high levels of inventory.
It was bad news. Ansell's share price fell 14% yesterday. Now, its earnings during COVID were very, very strong, given everyone wanted their products. No surprises. The group's share price went from $29 pre-COVID to $42 peak COVID. It's now just over $24. Ansell is heavily exposed to the global economic slowdown. Now, most of their products are fairly commoditized, so it doesn't have a lot of pricing power. So the slowdown hurts earnings. The downgrades also reflect foreign exchange losses, higher interest costs, and a higher tax rate, the company said. Chief Executive Officer Neil Salmon, though he wasn't glossing over it, he said the group's organisational structure was overly complex and it's getting in the way of the company's effectiveness.
The Senate hearing into the Big Four accounting and auditing firms continued yesterday, with EY criticising rival PwC over the firm's tax leak scandal.
EY Oceania Chief Executive and Regional Managing Director David LaRocca said the scandal was deeply disturbing and disappointing conduct, and his firm did not operate in the same way as PwC. He spent quite a bit of time discussing why EY's structure is different to PwC, and he said that the group had stopped all work on a previous project to split the accounting and auditing functions. Now, that idea of splitting the accounting and auditing functions is being pushed by people outside the Big Four, saying that these groups should be broken up. In EY's case, it just seems it was too hard to do, basically. LaRocca said his firm isn't perfect, and he said the company was saddened and shocked by the suicide death of a staffer last year. It resulted in the commissioning of an external review into the culture of the company. LaRocca yesterday promised to release the findings when they're made.
Now, Sean, a very big story over the last 24 hours. Victoria has abandoned plans to host the 2026 Commonwealth Games, saying the cost had blown out to up to $7 billion and the state couldn't afford it. And the blowback, hasn't that been pretty ferocious?
What an amazing story, don't you think?
Oh, and it seemed to just come out of nowhere yesterday morning, and all of a sudden it was the only thing everybody wanted to talk about.
In fact, the Commonwealth Games Federation said they got only 8 hours notice before Daniel Andrews made the announcement. It's just phenomenal.
And watching that press conference with the Commonwealth Games Federation, they looked a little bit shell-shocked.
Yeah. I mean, politicians have blown up about it, community groups, obviously the Federation itself, a bunch of sporting groups like, volleyball, hockey, netball. Netball's a big one, really big sport in Australia, huge amount of participation, doesn't get a run at the Olympic Games. The Commonwealth Games is kind of the prime event for netballers, and that's been taken from them. Daniel Andrews, he basically said it wasn't a difficult decision. It was better to put the $2.6 billion budgeted for the Games into hospital, roads and schools rather than a sporting event. He said the actual cost would blow out to $6 or $7 billion, just simply unaffordable, particularly when you're in a state where net debt is expected to hit $171 billion by the middle of 2027. It was notable yesterday that New South Wales, Western Australia, South Australia, Queensland and Tasmania very quickly said they're not interested in hosting the 2026 Games. Now, the Commonwealth Games Federation, you said they did look shell-shocked. They said they remain committed to finding an alternative host for the Games, and they blamed the cost blowouts on the Victorian government's desire to hold the Games in regional centres. Anyway, quite an amazing announcement, and obviously the last 24 hours, lots of talk about Victoria no longer being the sports capital of the country. I think it's fair to say that Melbourne really has been the sports capital of the country. Not so sure now.
A little bit of a blow to the reputation, perhaps. Now, Sean, we're finishing this part of the show with some good news, particularly if you happen to hold shares in defence technology company Drone Shield.
So the company has done a $33 million deal to sell equipment to the United States Department of Defense. What it does, I think, is really interesting. It makes systems that stops drones from communicating with their controllers or satellites. Basically, the drones become useless. Now, some of these systems are mounted on vehicles or buildings, but its most popular products, they kind of look like oversized rifles, are designed to be carried, according to a report in the Financial Review. This deal is much bigger than anything Drone Shield has done previously. Its share price jumped 19% on the news. Of course, the war in Ukraine has shown the full potential of drones as weapons. Sort of small kamikaze drones loaded with explosives are capable of destroying multi-million-dollar vehicles, weapon systems, doing all sorts of damage. So this technology, which blocks the communication system, is suddenly high in demand.
Yeah, and I think you spoke to Oleg Vornik, the CEO of Drone Shield, about a year ago now. And I will put the link to that interview in today's show notes because it is well worth a listen now in the context of this news from the last 24 hours, because it is a really, really interesting company doing some fascinating things right around the world. So I'll put that in the show notes. Well worth a listen. In international news, Sean, Chinese property developer Evergrande has for the first time unveiled the scale of financial losses incurred by a 2021 default that sparked a crisis, really, didn't it, in the country's property sector?
Yeah, and that crisis is still playing out today. The group, Evergrande, which is in the midst of a lengthy restructuring process, reported losses of about $100 billion in 2021 and $22 billion, these are all Aussie dollars, in 2022. The reports that have come out are a rare glimpse into the scale of the company's problems. There's been a real lack of disclosure. There's been all sorts of complex discussions with creditors, but we haven't known those numbers. $100 billion is a massive loss. Now, the company at the time of its default had borrowed about $20 billion from international creditors. Obviously, they're not going to get all their monies back.
And final story, Sean, dementia experts have hailed the latest landmark in the treatment of Alzheimer's after Eli Lilly released trial results that showed its new drug significantly slowed memory loss and cognitive decline. This is good news.
It is. The US Pharmaceuticals Group reported full findings of its phase 3 clinical study of its latest drug at the Alzheimer's Association International Conference in Amsterdam, according to the Financial Times. The antibody treatment slowed progression by about 35% in the early stages of the disease. The peer-reviewed results follow similar phase 3 findings released last November by US biotech Biogen and a Japanese drug company, SI. The latter, SI, has received full marketing approval from the US Food and Drug Administration. Now, Richard Oakley, who's the Associate Director of Research at UK charity the Alzheimer's Society, summed it up. He said, "The past 8 months have been a real turning point as 2 drugs are shown to slow down the progression of the disease after decades of work with no positive findings."
All right, now up next is the Fear and Greed Daily Interview. You're speaking today with Frank Windolowski, Executive Vice President, Insights and Data, APAC at Capgemini.
All about AI, what consumers think of it, what businesses should be doing about it.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Sean, of course, it is Wednesday as well. And what does that mean?
It means how can they afford that day?
Yes, indeed. There is a brand new episode out today. This is our sister podcast with Canna Campbell, the founder of Sugar Mama TV. How Do They Afford That is available wherever you listen to podcasts. Today, it's all about making big purchases. And we're talking kind of furniture and white goods and things.
Holidays?
Oh, no, not really. It is more about, this is my self-interest, not yours this time, Sean.
Right,
Partly because I had to go and buy an oven. And I
Ah.
wanted to know how you could save some money on doing it, whether you actually do still save money if you go into a retailer and offer to pay cash, or if you do it in person instead of doing it online. And then there's all these kind of things that you can do buying online where you actually get cash back and a bunch of different ways to buy. So it's really about tips on making big purchases and ways to save money doing it. Motivated by self-interest, but really everybody benefits.
Excellent. Can't wait to hear it.
You sound so genuine in saying that, Sean.
Your oven got me in.
Oh, good. Excellent. And good luck today at the Mumbrella 360 debate.
Thank you, Michael.
It's Wednesday, the 19th of July, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was the Fear and Greed Business News. Have a great day.